Hey folks, October has come and gone. It's time to check in on our ATM program, asset allocation model, see how we're doing in comparison to the overall stock market. Here's a hint, we're killing it. All right, let's go ahead and get into it. Killing it might be a strong word, but we're certainly doing much better than what our expectations have been for this account. Again, remember with the ATM asset allocation model, it was really twofold focus: beat a unmanaged index, because if you can't beat an unmanaged index, why are you doing anything other than just throwing your money passively into the SPY and let it do what it's going to do? So that's, step one. Can you beat that unmanaged index? And then step two, obviously, we would like to do it with a little less risk. And to say that we have been successful in that is a huge understatement. Let's go ahead and jump into it. Remember, again, we're just trying to beat the S&P, do it at less risk. So technically, if the market was down 20% in a year, like it was just this past year, and we're only down 15%, we would call that a win, because assuming we took on less risk to do that, we beat the market, even though it was still a loss, and we did it at less risk. But of course, we have done much better than that. We have not only outperformed the market, but we haven't had a single losing year yet. And again, we talk about this program as whether or not it can be a life-changing thing. That's a big, bold question to ask, but we have, over the last 3 years, averaged a 33% return per year. That's our average. That means we've done better, we've done worse, but that's what we've averaged. And that is or it certainly can be, a life-changing number if you will stick with it long enough. So again, this is to give you an overview, this is investing. It's not trading. We have people that sign up for the program and cancel after 3 weeks. Would you do that with your IRA or 401k? Go, geez, I'm not rich in 3 weeks. You got to stick with the plan. It's very passive in nature, works for IRAs as well as non-IRA accounts. In fact, in some of our structures, it actually works better in an IRA than a non-IRA account. It takes about 5 minutes a day. Every day we do between 1 and 10 portfolio adjustments. No trading. You're one and done. You put those on and you're done for the day. You walk away from it. No monitoring your accounts, no watching anything. That dual fold mandate, we want to, again, beat the market, do it at less risk. All of our results are tracked based on our net lick changes. So we don't track win-loss ratios. We don't track how many winners or losers we have, what the ROI of any particular trade is. We track it all off of our net liquidation value, which I think is the most honest. And honestly, it's the most important number to us. I mean, at the end of the day, isn't that what we really care about? Is our account value, is our net worth going up, or is it going down? We do have a hedge fund aspect to it. That's one of the reasons why we can take on less risk than the marketplace, because we balance our trades with both short and long positions on. We're very heavy on non-equity correlation, meaning we're trading uncorrelated strategies, we're trading uncorrelated setups with uncorrelated markets. We'll get into some of those non-equity correlations in a second here. 4 main components to the system. Number one is, let's talk about number 3 first of all. We start off the majority of our trades with credit strangles to generate cash flow. And then if it initiates into the step 1 and step 2, we would start to accumulate a short position, and then we would cash flow that with a covered put, or a long position, we'd cash flow that with a covered call. We also have anchor positions that we use on the SPY, and that's basically a leap covered right, and that could be bullish or bearish as well. So those are the 4 main setups that we use. Again, we talked about non-equity correlation. We trade crypto, nat gas, oil, silver, real estate, bonds, copper, coal, uranium, lithium, coffee. Not only do we trade the U.S. indices with the Russell and the S&P 500, but we trade India, Brazil, Chile, the Eurozone, Saudi Arabia, and Turkey. So this is how we endeavor to work towards having less risk. These non-correlated or uncorrelated with equity situations. Performance update, again, 2021, we absolutely trounced the market. Just absolute. I mean, it was just an absolutely banner year for us. 2022, even though our return was less, it's actually probably more impressive than our 2021 result because the market was in a bad correctional phase, lost almost 20%. We gained 22%, so that was fantastic. And you talk about the difference there. 100,000 in the S&P would have turned into $80,150. 100,000 in the ATM program turned into $122,400. It's a $42,000 difference on a $100,000 account. That's crazy. 77% return over those 2 years. Where are we at right now with regards to 2023 and year-to-date performance? Well, we're doing quite well, I have to say. The ATM program right now is pushing around 14% return on the year versus 9.6% for the S&P. It's about 35% better. In terms of outperforming the marketplace, those are crazy numbers. Like, when I was on Wall Street, if you could outperform the unmanaged indices by 5%, people loved you, and people thought that was fantastic. So again, we just continue to do what our intended purpose is, and that's beat the market, do it at less risk, do it really easy in terms of the effort that we need to put in, just 5 minutes a day. So just really happy with the results that we've had. We've got obviously this month, November and December still to go, but I do feel like we got a pretty darn good shot once again at beating the market's returns with taking on less volatility and risk. If you want to come trade with us in our live trading room, you can go do that as well. That's tradelivewithus.com. We'd love to have you on board. We'll do a Zoom conference call with you one-on-one just to make sure that you are a good fit for that program. But if you are more passive in nature, if you have investment funds rather than trading funds, and you want something that can allow you to sleep at night, you might want to try our ATM program. Try atmforfree.com. Again, our mantra is better returns, lower volatility. And again, we do think that this is just an absolutely asymmetric system. A great setup to basically change your life. I think that it can be life-changing. We throw that around a lot. I know it's it's a big thing to say, right? But where I'm at right now, this is actually a little old, so I'm actually up about to $72,000 right now. But assuming that we're at 70 grand, no additional additions into the account, grow it for 10 years at slightly below, not slightly above, slightly below what we have been averaging over the last 3 years. In this, we've been averaging 33% a year. And you compound it just once a year, that's $1 million in 10 years. That's 70 grand can grow to $1 million in 10 years. You just got to stay the course. You got to stick with it. That's really the key. So if you want to check it out, again, we'll have a Zoom session. You and I can talk and make sure that your allocation is correct, that you're doing it correctly. But the ATM program has been just absolutely gangbuster fantastic for us. Just absolutely fantastic. If you have any questions, you can always contact me. Here's my contacts. You can go to scottstewartcontacts.com, get a hold of me in various different ways. So there you go, guys. October, another awesome month for us. We'll see you at the end of November for the next update.